Okay, good morning. Just waiting for the YouTube stream to start. Should be any second now. Welcome, Tom. Got a few people waiting in YouTube, so I just want to see that actually running. I can see Discord is live and working. And come on, should be any second now. Yep, okay, great. We are up and live in Discord and on YouTube, and welcome everybody. It's Friday the 11th of August at 8 a.m. Eastern. It's US PPI day, so we have a session where we should and we do expect volatility at 8:30. When that comes up, we will be looking at it live. Anyway, let me get on with the disclaimers. You should know who I am, or hopefully you do know who I am by now. I am both a discretionary and algorithmic trader. I've been doing it a fair while, and I have been using Bookmap since 2014. Okay, let me move on to the disclaimer slide. All Bookmap Limited materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, right, let's get the stream up and running. Okay. I'm just waiting for it to appear on YouTube. Okay. Before I delve into the presentation, there's something right at the end of the presentation that I'm going to be talking about, which is unfinished auctions. And since we have ES, have we got ES? Sorry, no, you can't see that. Now you can see it. Okay, we've got ES in Bookmap on the left, and we've got ES and NQ on the right. Okay, one thing that I will be covering a little bit later when we start looking at ES and NQ side by side, because I do like to look at them side by side on this particular topic, is the topic of unfinished auctions. And that is where you have both buyers and sellers at a swing low or swing high. And I like them to be considered as significant swings, high and low, even if you're looking down even on a 1-minute chart. For example, here we are on a 3-minute chart. If you look over to the right on TradingView, and so right here is the swing low, and you can see you've got 37 sellers and 3 buyers. The 3 buyers isn't huge, but the idea is that you've got both buyers and sellers at that swing low, and that fulfills the definition of unfinished auction. The idea there is that the probability is greater than not that it will come back and finish that auction. I will continue to explore in this direction lower, but that could happen much, much later. In other words, it could reverse a very, very, very long way and then take it out, and that probability would still be fulfilled. So it's not something that you should rely on for scalping 1 or 2 ticks, but it is something that we will delve into a little bit later on. Anyway, let's go back to what this presentation is about. So I've got a few things on board. I know that I spent most of the hour the day before yesterday on Wednesday, talking about theory, about how you prep for an ETH session, but I just wanted to go into the practice of actually applying that and talking about a couple of things specifically. So one of the things that we're going to look at, and it bears most relevance in Asia, and in fact more so in Asia than Europe. It does have a lot of importance in Europe, but I'd say even more in Asia, because there are only a couple of equity indices trading. So you do need to look at quite a few other products to see what may be influencing the market. We're going to look at ES and NQ side by side. So we're going to go back in replay. I'm not actually going to replay as such with a play pause, but I'm going to go back and drag back. We're going to look at ES and NQ side by side at the London Open, and we are going to look at them live at the US PPI release. And if I quickly switch over to the calendar So I switch over to the calendar, get rid of that. Okay. So yeah, the major release is the US PPI. It's a bright red flag. You've got the core PPI and the normal PPI. For our purposes, it just means high volatility. We are not going to delve into the forecasted level or what may happen if it's a beat or a miss. All we are going to do is we are going to anticipate that the market will be volatile leading up to the release and for a good while afterwards. There is a statistic as well that sometimes plays out, especially on Fridays when we have one of these major releases. And that statistic is that the high or low of the next while, which is basically the high and low, including the whole RTH session, is made within 15 minutes of that release. This obviously applies more to trend days. For example, you may have a tremendous beat on a particular release, and then you have a trend day upwards, and so the low would then be formed within the 15 minutes. Sometimes, but not always, the first move on these releases is a law. So it's basically misleading people. So it'll go one way first, which will be the wrong way, and then it will go the right way, whichever way that is, whether that's up or down. And I'm just using wrong or right in the sense of misleading people. Okay, sorry, I'm just conscious of the clock because we have that 8:30 news release. Okay, so correlations. Okay, I was going to have a quick look at the next slide. Come on. No. Okay, actually, before I get to the next slide, let's just have an overview of something which is significant and does relate to both swing and scalping trading that we do or we talk about in this session. Yeah, I may not talk about it much in my webinars, but I always have a daily chart.
NQ sell 51 stop.
A daily chart visible. Hold on, let me just close that off again and get back to. I just want to see for a second. Yes, we've got that unfinished auction in ES that we are sort of watching at the same time, so we're expecting that at some point to be taken out. And whilst we have a quick look at the ES screen, let's note the heavy bands of liquidity below. And if I get the NQ one up, I will make these symmetrically wide a little bit later, and just you have to zoom out or vertically a long way in NQ to get the same visibility of liquidity. But you did have a really big band a while ago, about the 40 level, which is no longer there. But you've got some liquidity at 50, which we tend to ignore. Nothing much in NQ, but the real relevance there is the ES one and this unfinished auction, which they're coming down again. So they've tagged it once, and they're coming towards another tag. Anyway, that's just to bear in mind whilst we talk. Okay, yep. If I get back to the overview of where we are, whilst the unfinished auction may or may not be taken out. The daily, I've got two trend lines drawn on the daily ES chart here. We've got a longer term trend line, which is the lower degree slope, and the more steep or the steeper trend line, which is the more recent trend line on the daily. The original one is still intact, but the steeper one, the more recent trend line, has been broken. So one thing to note there is that the strongest little uptrend in this AI bubble has been burst, in the sense that we have broken the uptrend line and we're in a small down move. As to whether we're going to break the main trend line remains to be seen. And again, with NQ, it's the same thing, but we are now at the main trend line, so it will be more significant if this one is broken. The point being of looking at these dailies in my perspective of how I trade is that I do still need to know the overall picture. yeah, for example, um, it does help even if you are scalping to know that the market is in a very, very strong up move or a very, very strong down move, or it's in balance. And talking of balance, let us get off that for a second, go back to where we were on this and have a quick look at balance on ES, okay, and where we are in relation to the range. So we're here on Friday ETH or Thursday, depending on which time you consider the ETH to start at. Thursday evening, Friday morning, New York time. So you've got RTH of Thursday, Wednesday, Tuesday, and Monday. And if we were to um, look at the value that had formed in this region, and yeah, I do still have my pen, so I will remember to draw at this point. Let me come on, Mr. Pen. No, it's not being friendly today. Okay. Uh, Anyway, we'll just do it with the mouse if the drawing tablet will not play ball with us. So we've got a value here which is in the region of 4508 down to around about here, which is 4476. So you've got a large value area encompassing some earlier value. No, it is doing that. But essentially that is the value area, and we're getting very, very close to breaking out of that value area and maybe moving down. If you have been on the news sheets for the last few weeks or watching YouTubes of talking heads, etc., and I hope I'm not a talking head in the sense that I do not predict what markets will do. There's been a lot of talk about ES getting down to the 4450 and 4400 options levels. I do not predict. I do look at value as it is established and where value will be broken. So the point here, the daily trend line, the steepest daily trend line, or the most immediate one, has been broken. So we are no longer in a steep uptrend, but we are still in an overall uptrend, and we are at the lower end of value, and we're very, very close to the bottom of value. So there is a potential, if we have really significant news in the market release at 8:30, that we could break down and out of value and then travel downwards to some other value. Anyway, that is just a thought. Okay. Right, again, I have to have a look at the clock, and I do also have to. I've been very remiss in not asking for any questions or comments, or even looking at the Discord carefully to see if there were any. We've got a comment from Danny Garcia in YouTube. Is your bias short today on the two indices? Well, if we look at the ES, and I'm talking about my bias for the very, very short term, as in the next few minutes. My bias, looking at the snapshot of ES, I'm checking that you can all see that. Yes, you can. Just scroll up, make sure you can. Yeah, I think YouTube's lagging. Yeah, we've got a lot of liquidity down there, which looks like it may well be tagged. So if I was scalping, which I'm not because I am talking, I would be looking more for shorts than I am for longs. But whilst we're in value, I do not have a bias. Only after we break out of that value that I just showed on the daily volume market profiles, then I may have a strong bias short at that point. But it depends what happens when we break out of that value, whether we break out cleanly and then cannot get back into value, or whether we just have a failed breakout low and then go straight back into value. But yeah, there is a potential for a direction in a downward move, but we will see, and we do not predict. So any bias that I say that I have should be completely irrelevant to you in your trading. Anything that I comment on, may be useful in terms of how one can use Bookmap or any of the other things, the tools that I use, but I am completely and utterly incapable of predicting the future. any trade should I take now, whether it's a long or a short, any individual trade, and I'll say this again, every single session has a 50-50 chance. However, a setup which has been statistically proven or back tested over a series of trades, whether it be 20 or higher, will have a completely different probability. So that's not the individual trade, but the series of trades. Okay, so I'm not sure I answered your question, Danny, but maybe I went round the houses and answered it in a fashion. Okay, let us get back to the slideshow, and I've got a couple of shots that I wanted to show. Okay, let me just move on. Okay, we've looked at the trend lines or the dailies of ES and NQ. Okay, correlations. Right, I mentioned a few minutes ago that correlations can be very important, especially in Asia and also in Europe. Okay, one of the things that I mentioned early on was that I've programmed quite a lot, and all of the stuff that I've done on TradingView is all free. I'm only a pro member. I'm certainly not allowed to sell anything with a pro membership on TradingView, but I can provide free tools for the community. And please please do use them if you wish to use them. One of those tools is this little table here, and I'll explain what it does in the correlation perspective and how I use that to help me when I'm looking at the heat map in Bookmap in Asia. This is really relevant to Asia. I'm not exactly sure when I took this screenshot. It was sometime in ETH. It may have been after Asia. It was probably early in the European session. Okay. The just looking across, okay, we have the first column, which is just the symbols that have some correlation, whether it's inverse or direct, to the indices that I trade, which is ES and NQ. And you have a percentage up or down on the day. That's percentage from the previous day's close. Then you've got the current value. The shading, the color shading that I built into this is that um, if if we are at if we are near the high, it will be green, and it will get more and more green the further higher we get, and there is actually a change of color as it makes a new high. Off the top of my head, I've forgotten what color I coded into that, but it's all user configurable. Red obviously is when it's going down, and yellow is it's pretty much unchanged. Yep. And then we have 1, 2, 3, 4 time frames, which are completely configurable again. This is a way for me to look at lots and lots of markets, and this is just a part of what I look at. Lots of markets at the same time to see what might be driving ES and NQ. So you've got 4 time frames, which is, I think it's 1 minute, 3 minutes, 10 minutes, and 30 minutes. I've squashed down that row. But the idea is that I can quickly see across, in this case, 1, 2, 3, 7, 8 markets, what they are doing on this session. And it is just an eyeballs not snapshot. So I lean over to my left monitor, my left large monitor, see this, and then I ignore it. So it's not something that I stare at all the time, whereas you will find me staring at Bookmap all the time. But it is just something that I do find useful, and that's why I built it. Okay, right. We are going to look at the London Open. So to have a look at the London Open, first you need to see what really happened in the Asian session of the 2 main indices before the London Open. So the 2 main indices, we have CFDs here, which are contracts for difference, which is a free quasi identical version of the futures index for the Japan Nikkei 225 and the China or Shanghai A50. The reason why I've got the CFDs, which are the free equivalent, is because the data is free, and for my purpose, which is that I do not trade these instruments, but I instead am trading ES and NQ. Close enough is good enough. So the actual values there are not going to be identical to the Nikkei. They're not allowed to be because they are not the licensed data provider, but they move virtually or basically they do move in lockstep with the underlying futures indices. So that's why I've got them there. And the purpose for looking at this before the London Open is that after the two China Opens at about 9 o'clock to 9:30, the market went down. China went down heavily, as we saw in the correlation table a second ago, and Japan went down a little bit to a smaller extent, but not as significant. Okay, and as we moved into the London Open, we've got here the quasi equivalent of the DAX, and we have the equivalent of the stocks. So you can see that DE30 was actually DE40. They just never changed the name. There are now 40 stocks that comprise the DAX index and 50 stocks in the Euro Stocks index. So you can see that there was a mini reversal and they were heading up into the London Open. Okay, one probability again, nothing is predictive. Um, some things happen more often than not. And one thing that they do like to do, and I mentioned this as well, is they like to squeeze people so that if the markets are overall in value, but they have been going down in the first ETH session being the Asian session, there is an opportunity for the larger players or the algos to squeeze the life out of retail and smaller players at the beginning or well into the European session, being the London Open, by going long. So that's that is just something to bear in mind, that we'd already had a little reversal going into the London Open, and there was some strength that was appearing in the stocks and euro. And the other thing that you can't see here is that the actual settlement or the home level for the DAX was above. Okay, so let me get off that and we'll go back to Bookmap. Okay, so this is the fun bit where I always have fun dragging it back a bit. Okay, so 3 o'clock is the London Open, 3 a.m. is the London Open. And so if I get that to be at 2:30, I know the NQ is a bit smaller in comparison. And actually, for this purpose, I may as well make them a little bit more symmetrical. Okay. Bear with me while I have to drag back the NQ. The NQ is a very volatile beast, a very thin beast, so it does move up and down, so you have to scale out vertically a fair bit. 4 and 3. Okay. Okay, at that time, you've got a resting liquidity level up above at 4500, which I tend to ignore. Trying to really zoom in properly so you can actually see what Bookmap would have looked like at that time. I might have a quick look at NQ on its own, and then we'll have a look at ES on its own, and then we'll look at them side by side. Yeah, you can't really get a true perspective until you zoom in, because you wouldn't really be looking at them on that zoomed out a basis unless you were having a quick check of particular levels and particular levels of liquidity as well. Okay, so that is 212. Good. Okay. So you've got this reversal off liquidity, you've got this resting liquidity. So one of the things that you are going to do straight away is see where this has come in. So if you look at the level that it is at, and it does get hit, so I apologize for zooming out and so you can see it get hit. You can see it is at 15,228, which is obviously not a round number. So that resting liquidity, and I did trade this session, but I won't talk about the trades I took. That has interest to me. So you'll actually see this a lot as well in NQ, especially in ETH, that where you have a swing high, and that resulted in some movement away. They'll put in resting liquidity. Whatever reason they do it, and again, we cannot read their minds as to exactly why they do it, but maybe it's a magnet to try and say that they are still interested to go further in that direction, or but maybe it's a magnet to say, look, come up here and we'll take out the stops of any shorts that are around here. But for whatever reason, that was there, and that was placed at 148. So it's not long-term resting liquidity. It's not the kind that I'd really love, which has been there for hours and hours, but it is at a fairly unusual price level, and it also correlates with a setup of the test of the supply zone that we talked about in the last session. So that does hold some interest to me. So what I would be looking at, and let me get this back on to, yeah, what I would be looking at is longs. I would have been looking at longs after that reversal into the London Open. And the reason why, I think I've made clear that there's strong confluence, and I use the word confluence rather than correlation here, between that and the DAX moves into the London Open. And the fact that DAX has a settlement level, a home level above where we're at, is of interest to us. And if we look at where I'm just looking again where we were going into that. Yeah, we'd also just tagged the purple line is settlement in NQ. So we tagged the home level there. So one of the reasons why it might want to go down, as I discussed previously, is that they do love to tag these home levels in every single one of these indices. But that statistic, and it's best to call it a statistic rather than any predictive thing at all, had already been fulfilled. So anybody looking for, oh, it's going to go down and down and down and tag that level, that stat's gone out the window. So here we have other stats, and we have confluence and correlation with DAX. So we're looking at longs going up. So the initial move that I would have looked for was up. Okay, and I just want to also have a look at this as well. I want to have a look at the reversal in ES. Okay, so even though, as I said, I had various reasons for looking upwards, and I did trade a couple of scalps long, not huge trades, but just small scalps long going into that London Open. This is really important information going into there. So if we zoom in and we look at this a little bit more closely, it's not an unfinished auction because there's no buyers at this level. There is an iceberg. There is a level which is considered reasonable in terms of volume of buyers absorbing sellers of 161, which at that time of the day is significant. If it was, all right, hold on, I will have to stop because we are coming up to 8:30 and I did not want you to miss it if you were watching this live. So I'm just going to turn on Financial Juice, if it will, and we are just going to go live. But the point there is that we had a significant amount of volume that was likely to be tested later, and we can come back to that later. But let us move into the live scenario. Okay, so let us look at that. As we go into the news, and what time is it? 8:28 and 45 seconds. We have no significant liquidity in ES above that is not at a round number. You know, we've seen that they've just added a couple of bits of liquidity up here at 90 and 92. We have a heavy amount of liquidity below, so that is interesting.
1 minute remaining. I'll lead with the US PPI year over year.
Okay, so we're down to 1 minute and we've got two significant bands. So that, again, I'm not making any predictions, but it's just interesting to note where the liquidity is going into a release. So yeah, so we are going to just watch this and observe what happens. And quickly on NQ, you have got something which is almost the 30 where I care about, and you definitely have a much larger level below, but that's a round number, so I will discount all liquidity in NQ. Maybe the only one is way up above at 15,220. Would I pay any attention to it? where are we going? 15 seconds. So let's just watch what happens. So you get the
10 seconds.
pre-release burst of energy. And bear in mind, the first move can often be the wrong move. Okay.
0.8%, 0.8% higher than forecast, 0.7%, month over month, 0.3%, 0.3% higher than forecast, 0.2%. Core PPI year over year, 2.4%, 2.4% higher than forecast, 2.3%, and core PPI month over month, 0.3%, 0.
Okay, let me shut that off for you. Okay, so the first thing that NQ did was get straight down to that liquidity. We won't zoom in and find out whether it was actually taken out or not. It looks at, on this perspective, that they did take out, or they did interact with that liquidity, and they bounced off it and then had a spring a little bit later. ES had a little burst upwards, but is currently heading, or maybe grinding downwards towards the liquidity band below. Yeah, I just wanted people to see them together at a news release, because it's not something I'm sure that people do that often. I'm often asked,
NQ sell 185 stop. NQ sell 154 stop.
I'm often asked various questions, one being which leads the other. And again, I say that I cannot predict the future, and that both of them often lead the other. And you do not know at any one moment in time which one will be the next to lead. But certainly the Nasdaq's being the main home of the big techs can often lead in ETH. And on this particular release, it did look like they led first. Okay, and in terms of what we could see before that release, in terms of a first touch of a big band of liquidity, it was below and it was touched. So that is very, very nice. If you're willing to stick out your neck and you had some way of controlling your risk, i.e. you had some means of identifying where you're going to put a stop, and that the target was a multiple of the amount that you were risking. Yeah, one thing I would not do on a news release is try and get a 1R result. It is such a risky time because of the high level of volatility. Your stops can get smashed through, which means that your stop may not be filled at the price that you have set. So if you only target 1R, which is 1 times the return on your risk, that may not be the wisest thing to do in such a volatile instance. Okay, as we look at this, still we've got a lot of liquidity below, and that's staying in place. None of the liquidity in NQ is resting, so you're just seeing it basically as book pressure. There was somebody in the Discord today asking about gold. Gold is very, very similar to this in terms of book pressure with non-resting levels, which just move around as a high-level boundary of a price zone. Okay, so the rule that or one of the likelihoods that we often discuss is that as price approaches a large band of liquidity, the first touch will often result in a bounce or rejection away, and then if it cannot get very far, it will head back to that liquidity and may start eating through it. Okay, we will see if it does that. And we were talking about unfinished auctions. This is not an unfinished auction, but what is interesting is the size of volume at the low. The opposite of an unfinished auction is something that is called a rollover, where you just have a tiny bit of liquidity. Here we go. We're following that particular rule of first touch liquidity and then getting into it and eating a bit of it on the second touch. Yeah, the opposite of what is known as an unfinished auction is a rollover, where you have a tiny, tiny volume at the swing low or swing high, and again, and for a swing low, it's just sellers, and for a swing high, it's just buyers, and not both. And let's have a look again. We haven't got another unfinished auction, but what I'd encourage people to do, when you get a chance to get into your Bookmap and you replay sessions and you replay ETH sessions is if you have the opportunity to put in a column where you've got the volume numbers of sells and buys, and then analyze the highs and lows and look at the type of auctioning or exploration at those swing points and see if they can help you at all in determining whether that area, on this, for example, this swing low then becomes a target, partly based on the unfinished type of exploration or poor low or whatever you want to call it that has taken place there. It's something that is worth looking at. Again, no predictive values, no promises. This is a casino. But that's one of the reasons why I wanted to explain why I have these columns, these three columns here in my book maps. In fact, both of my book maps for ES and NQ. So I've got my, just recapping again, I've got my delta column. And the one thing that I lose every time I restart is this one. Let me just put that back in. I've got my delta column, my sells and my buys. Okay. I don't make these very wide, and you can see why now, because I do not have the space. And I have that much information. I have enough profiling information from the profiles that I've shown you in Sierra that I do not need them. I've also got various other ways of looking at profiles. But for the information that I need to see in Bookmap, I do find all three of these columns very, very relevant. So I want to know, are people selling here? Are people buying? I want to be able to zoom into, on a reversal, where were the large trades? Were they large sells on the way down? Did they start buying on the way down? Did they start buying on the way up? I want to know all that kind of information, and those columns go hand in hand with that. So effectively, we've had a little spring as well. So if we zoom in here, so this is one of the setups that we were talking about the other day, which is, let me see, I'm going to try again with my graphics tablet, see whether it wants to play ball with me or not. Oh, it does. Good. Right. So we have this level here, and they go down and then they go up. Okay. I've got fading ink on at the moment. I'm not quite sure why. Let me just turn it off so it doesn't fade on me. Okay, that should not fade now. So if we have a look here. So it's not a very good straight line. So a spring or a breakout failure in the old Wyckoff sense is where they retest the prior low. They go below it, they go exploring below it, but there's an immediate rejection, and then it goes up much higher, and it goes the other way. And there is a setup there where you have a clear risk point, which is the low of the failed breakout, and you have a target, or you can have lots of targets. One target might be a small swing high up there, which it did not achieve. Okay, there is also a statistic about these springs, in that they often fail eventually. So they may give you one or two good setups in the opposite direction, or in this case a long direction, but they will then often fail, and they will take out the spring low, as it's known. But they can also be a complete reversal. That's one of the ways that you can get a total reversal on the day, one of these springs. In fact, you'll see that very, very often. Okay, I'm just going to stop and just check if there's any more questions. Again, no more questions. Okay, I'll keep the markets up for a bit as we can watch. I might have to zoom out NQ a little bit because it is too small to really look at it. When I in my own windows on my giant monitors, I've got a wider representation of Nasdaq and a wider representation of ES. It's just scrunched in to this screen so I can present them to you at the same time in tandem, so you can see how they work together. And I can't stress enough that the indices do tend to work together in the ETH session much more so than they do in the RTH session. In the RTH session, you'll often get divergence, and that can be really quite an interesting observation or statistic, because when you get major diversion between the four indices, and by the four indices I mean ES, NQ, YM, and RTY. But if you get major divergence between one or two of the four, that can often be a significant turning point for the markets, the indices markets as a whole, i.e. for all four of them. And that's, I'm talking about a longer term one rather than one for half an hour, an hour or two. Okay, so we go back here and we keep analyzing what's happening. We've still got a heavy band of liquidity. It's still pushing down, still grinding down. That spring setup that we had there does not look like it will hold. But we never predict the future. Okay, let me just get rid of all the blue lines on the screen as well. And also in NQ, it's quite, what we had there was very, very nice as well. It's one of those picture perfect things which don't happen all the time. Obviously, we might just zoom in and have a look at this picture perfect action where you have a nice move down. Let me show you it was a nice move down by actually zooming in vertically. A nice move down, crashing through liquidity and then bouncing straight off it. And when I try to explain on my first webinar, maybe it was last week, one of the things on NQ that you look at in ETH where you are going to fade these strong moves down is that you want this delta column. If you're thinking about going long, you want a long series of reds all the way down to the bottom. In other words, you want fuel for the buyers to take to get them much, much higher. Okay, here it's not a huge move. It's taken it from 15,118 up to 15,135, about 17 points. But they've also got a resting iceberg, which they may just about take out now. In terms of how you use Bookmap and how you use Bookmap for NQ, that is the purpose of the delta column, to see the positioning, or one of the purposes rather, or one of my main purposes in using that delta column in NQ is having an analysis tool, a live analysis tool, because of the way I can zoom in and out to see how or if any players are likely to be trapped at the swing low or the swing high. Okay, yeah, that resting iceberg has now been taken out. And it's interesting here on the reverse side to watch the green delta at the top there, and then to notice, and I've got this in the way so I might have to move that out, and then you zoom in vertically to see how many buyers are potentially acting as fuel should we go down. Again, we don't predict that we're going to go down, we're just looking to see what level of fuel, and this is where basic arithmetic in your head is quite useful as well, just to see whether that would have been fuel. And in this case, probably not enough fuel because they bounced straight back up. And you've got this liquidity up there, which they may target. And we did know that on the way down, we had significant liquidity on the sell side to give them fuel to go up. Okay. So it's just, yeah, and now on this move up high, you're beginning to get a good length of greens. In NQ, when you start getting reds in the middle of it, that is not what you want to see when you're thinking about shorting this zone here, because the reds are potentially the trap sellers, and this could just be a reaccumulation and then a grind higher up towards more liquidity. So when as I was saying, what you wanted to see was a long stretch of greens. So if that gets interrupted by a decent stretch of reds, not a great sign. Okay, the reason why I was thinking about a short, it was more of what I could see in ES being the liquidity that was sitting right there below, but does not mean that they will visit now. What can often happen, and anyone that's traded ES in RTH will know this very, very well, is that you might have great liquidity down here, but they determine that they have not got enough fuel yet, and they will play games up and up and up and go much, much higher, and then all of a sudden at one of the relevant times of the morning session, whether that's 10 or 10:30, 11, 11:30, whatever, I tend to equate them with half-hour periods. They don't have to be exactly on a half-hour period. They will then go and do a complete reversal and go straight to that liquidity. Okay, we did in the end get, if we look at this little reversal here on NQ, because it's easier to see in terms of trap buyers, that right at the end we did get a decent block of green, and then once we managed to get under the red, down we went, and that had tremendous confluence with this lovely liquidity we've got below in ES. Okay, I'm going to stop and just see if there are any more questions. No more questions. I'm just also going to go back to the presentation outline and just try and remind myself, should I have... yeah, and I can actually see it here. Looking more closely at correlations in ETH, using ES and NQ side by side, which we've been doing for the last 20 minutes.
NQ sell 71 stop.
ES is getting back towards that liquidity, NQ is leading it down. Watching the indices at the live PPI release, analyzing resting liquidity, which we've done to extent, and analyzing unfinished auctions. Okay. Right. Okay. We've just seen, we've seen a beautiful stop in NQ there. So the SI indicator gave us a 96, and we could zoom out and maybe it consists of 2 or 3 individual large trades adding up to 96. But that is a very, very significant number. I like to hear more audio alerts than not, especially for NQ when I'm trading in ETH. So I have that set. I think that audio alert went through the microphone. I'm not, since I can't hear it. I can't hear what you hear. I do not know, but there was an audio alert because we were over 50 and we had 96. And if we have a look at that liquidity, they're adding some liquidity there. I do love this. I mean, this is probably my favorite heat map addition since 2014, which is the notation in text where they're adding or subtracting significant liquidity. Again, you can customize it. It may just be me, but I love seeing the actual number that they have just taken back or not. And one of the reasons why I like those numbers is because the liquidity coloring will be relative. And by that I mean that it depends on how thick or thin the actual market is at that time as to what those colors will be. You know, this bright red here doesn't necessarily equate with what it may be at the moment, which is 55 or 56. It will just be relative to whatever else is in the book. But when you see
NQ sell 65 stop.
ES is getting right down to that liquidity, you would think that it will not be able to eat it on the first go, but again, I cannot predict anything, so I will try not to predict anything. Yeah, so going back to this notation of this liquidity, these are factual objective numbers. So I know right there they took off 22 just before before price got there. So I know that it did not interact with that little bit of liquidity there. It had a small bounce. They tried to get as many as they could with that iceberg, and then they went down to further to this liquidity at towards 01. The closer we get to these round numbers, then I begin to take notice of them in NQ or ES. And in ES, all of a sudden we have a little iceberg. Again, we're now, since we're past 8:30 and we have a significant number of traders in the market, the numbers that you would consider as significant for icebergs changes. So 85 is not significant. It may have some level of significance in the Asian session, but 85 at 8:50 a.m. Eastern after a PPI release has no significance whatsoever. So the fact that there was 85 buy ice there, you can take with a massive grain of salt. When you have a 371 stop from the, or 372 now on the SI indicator, that is a bit more of interest to me. Okay. And now, I mean, after we've eaten through the first liquidity, we then zoom out vertically and we see what's below. We're not expecting them to go straight down. Nothing goes in a straight line in any market unless you have a major war event or something of that nature, force majeure, as it's often called, you have a massive band of liquidity around about that round number of 4450. And one of the things that we can do, don't forget that YM is an old, they're old markers, so I should have removed them before this webinar, but let's ignore them for this purpose. So we're just scrolling down the order book and seeing what is there. So you've got this, and I will really zoom in just to make sure that it does say 1722 when you get, so it's not clustered as one. Sometimes you find when you cluster or zoom out on the vertical scale of an instrument, this number here will be aggregated with other levels, so that when you zoom in, you get the exact level. But here it is, 1722. As you can see, if we drag back up and down, that is out of context. That is, in other words, significantly larger than anything else that we can see in the order book. That does not mean that it is fake. Again, you cannot predict. Quite often, we're going back a couple of years, when we had a much thicker order book, that if you had something like 1,000 orders sitting at a price level in an order book, it was more likely than not that it would be filled completely and that it wasn't faking or spoofing in any way. So the fact that that is a very large level is of interest to me. And again, not expecting it to go down in any form of straight line, but it's something that could be of interest should the market go down later and you're in a short and you have a runner on. One thing that I do go on and on about is scaling. And for that purpose, I recommend retail traders with small accounts to always use the micros rather than the majors to give yourself the chance to scale in and to scale out. Sorry, I do not recommend scaling in. Let me clarify that. I do not recommend that at all. Scaling in is a way, or in its simple English terms, it's basically adding to the number of orders you placed in a market. So you may say you've entered 10 micros here and then you add 10 more micros there. The problem with that approach, in my opinion, is that can lead to bankruptcy. Because if you're wrong and the market keeps going against you, you will suddenly find yourself in major drawdown, and you may find your account completely broken or closed by your broker. If you only trade the R, the same dollar amount that you've intended to for every single trade, or maybe there are certain setups where you trade 2R or whatever, the chances of such a drawdown breaking your account are much slimmer. Okay, and of course it goes down to zero if you have a set stop and you stick to it and you follow the process that you set out in your plan, which is something that I do recommend that you do. Okay, looks like we've got something to zoom in on ES to have a quick look at. Again, we're talking about unfinished auctions, so it's of interest here that you've got a delta of 219, but you've got 231 sellers and 12 buyers. Again, it's not huge, but it's a decent number. So the probability, again, because it's not a small number and because you have both buyers and sellers at that swing point, is that it will get taken out more likely than not at some point later. And again, I do not mean now, I mean at some point later in the future during this ETH session or the RTH session. As to when you completely and utterly disregard any form of unfinished auction or poor swing points, poor in the volume profile perspective, I don't tend to look at them after this day. So, if there was some big unfinished auction at a swing point that occurred, which had not been taken out yet, but it occurred on Friday and I was looking on Monday or Sunday night, I would not pay it any attention whatsoever. It's just really for this session, and I see the RTH as a continuation of the ETH session. It's basically one day broken into sub-sessions in my eyes, even though the market or the underlying market is only really open from 9:30 Eastern until 4. Okay, now it's again just talking about that, zooming out on here. I'm just checking as well that there are no more slides that I wanted to. No, I don't think there are any more slides. I really, we've got some more questions. Thank you. Balan, I'm just reading your question because it's 2 comments, and thanks for that information. But Balan's pointing out that 1700 there has been there for the last 4 weeks. Okay, again, that's great to know, and that's something that you probably put into your journals. And we were talking about journaling a couple of sessions ago, and what I do recommend is that you journal every session that you're at your desk watching the markets, and you timestamp it. If we have moved a significant distance from where that 1700 is, or in fact we still haven't got anywhere really close to it yet, you cannot really factor it into the setups that you are looking at the moment. It is just nice to have information, as you point out. I do take note of them, but I also know that they can be totally and utterly irrelevant. They can be false advertising. Well, I do believe that seeing where the liquidity is can have tremendous value, and hopefully I'll be able to show that as we go through these live webinars, and I talk about some of the liquidity live before price gets anywhere near it. But I also acknowledge completely that that spoofing does take place, or false advertising, that people place liquidity there. The reason, and then it is never filled, and we did actually have a look at a couple of those examples, certainly in NQ a few minutes ago when we zoomed in. But what does interest me about the liquidity, regardless of whether it's actually filled, is that I'm interested to know that they're advertising for potential participation around that zone, regardless of whether they actually do want to trade there, or they have traded before it gets there, or they will trade later because they think they can get a cheaper price to buy at or a higher price to sell at. I'm interested in that advertising, but I accept that it is advertising. A lot of people, look at some of the options information, such as the price paid and the volume paid at various options levels, and I do that as well. And they say that has much more beneficial advantage because a lot of this liquidity, a lot of these liquidity levels in ES and NQ disappear before they're actually traded. That is fine, but they're all just forms of information. If anybody thinks they can predict the future, I think they may not be able to do so. And all these pieces of information are just bits of information that you can put into a plan that you can then use to see if those bits of information help with the edge that you are trying to execute. I'm just reading the third point by Balan. What's the motivation of having such a large order? I don't know. Maybe they're trying to attract people down, but the point I'd make to you, Balan, is that you don't need to know. That's not something that you should be trying to do, because unless you can demonstrate to yourself you get an edge by knowing that they are placed at however low it was 4 weeks in advance. If there's an edge and you back test it and you've shown to yourself that information is super useful to you, or critical to you in executing that edge, then it's good. Otherwise, it's just nice to know information. There's other information that's out there. There's millions of bits of information out there. There are people out there that use umpteen indicators that do this, that, the other. I have no idea what they do, but I would suggest that you concentrate on testing information that you can believe in, and that then you can prove to yourself does have a statistical advantage to you in executing your setups that return to you more money than you're willing to place on individual trades, and that should be your focus. We can never know why a lot of the participants do what they do in the market, and we don't need to. And that's the beauty of trading. There are so many different ways of doing it, And the only thing that you can do is to control your risk and determine when it is that you place a trade in the market, when it is, if you decide to cut your loss and run. Those are basically the only things that you can do. The rest, as to whether it takes out your resting target, is up to the market. Anyway, I think I'm coming up to 9 o'clock, so I have been going on for an hour. I hope, again, that I have provided some information of use to people. And just watching ES take out another small iceberg. So yeah, so far the action has been down. Doesn't mean that when we get to 9:30 and the RTH open that we won't do something in completely the opposite direction. But thank you very, very much for watching this stream, and I hope there was